Hello and welcome to the How to Exit podcast. Today I'm here with Natu Myers. He is the founder of raises.com. And we're going to have a great time today talking about raising money and venture capitalists and all this stuff, raising money for real estate, raising money for businesses, everything in that realm. Thank you for being on the show today.
Hey, thank you for the opportunity.
Let's just start off where we always start off. Give us your origin story. How did you get started in this space? And what had you create such a thing as raises.com?
Yeah, no, sure. So then my origin story.
Yeah.
It all started on a planet called Krypton. So all it is in a nutshell is my background was more in, I guess my education and background was more in software development and coding and programming. After working with, it was like a health tech company and learning how to code and things like that. This was before Bitcoin and cryptocurrency got famous. And everybody knew about it. So I learned about what the things were, what Ethereum was, and all this stuff before people were even talking about it in the early days. So what happened is there are a lot of investors that wanted to learn what it is, and then I found that the bigger problem was more the companies that wanted to raise money rather than the cryptocurrencies needing to, or rather the investors needing to deploy money into cryptocurrency. That seemed to be a bigger problem. So what I did, worked with a lot of mentors, coaches, people that were ahead of me, and then I just learned that what I needed to do was just focus on getting the companies to raise money and then showing them how to do it compliantly. Because at the time, there weren't any registered, and we can go into this for the audience, things called registered broker dealers that could allow companies to raise money. So I worked with one of the two companies in Canada that was legally allowed to raise money on behalf of companies. We did it for cryptocurrency, but we did it for all types of companies. And then I saw that the bigger niche, the more mass market was more of just regular companies and regular either real estate deals that needed to get funded. And people that wanted to buy businesses was like a giant emerging market and trend. So what I do now is like I learned from these mentors and then these broker dealers, these investment bankers, and we're actually spinning up like our own group of companies. So just raises.com for short. All we do in a nutshell is assist people in structuring their real estate or business acquisition deals, and then assisting them in building them the systems to raise capital and getting their capital raising team underneath them. So that's what we do in a nutshell.
And then you guys, so it's both real estate. In the real estate world, we refer to them as syndications. Is it the same thing inside of the business raising money for business funds, or is there another name for it?
Yeah, well, that's the same thing. We just accept people are looking to buy a business. All we do, we just say, hey, just either it's a share purchase, or I mean, you're just offering the shares of the target company, if it makes sense, or there is a fund where we create a fund so that people can raise money to pay for the down payments of multiple businesses via a fund. So those are the two ways we do it for businesses as well.
Okay. I see on your website it says 10 million plus. Is that normally your sweet spot? Like you're looking for people that are raising 10 million and up?
Yeah, I mean, it's a nice marketing kind of. We get the best quote unquote, I guess, marketing leads if we say that. We get people that aren't working with deals that are so big that they have so much experience that they barely need our help. Nor do
Hmm.
we work with people that are so small that that they don't even understand that they're not even aware of the problem of needing to raise more money. So just because nothing more about the deals, more about the people we talk to, because we focus more on the people because the deals come from people. But yeah, the second thing, obviously, the deal, because like if there's a $10 million acquisition, we just like that nice kind of small range to play with, minimum like 1 to 2 million, because it shows that they're open to going beyond single family houses, and then that's where we mostly play.
What does somebody need to have kind of planned out before they reach out to a company like yours?
When they're looking to purchase a business, what they need to have planned out, we just like to overemphasize understanding where the money's coming. I guess I'll just share like Chamara is a really nice fellow and who hopped on and we're working with a really nice fellow, like working with him. So for him, he wants to buy HVAC businesses, and he's kind of like, okay, yeah, I don't have the business on contract. What do I do? So what we told him, hey, let's just do the draft documents. So remember your other fellow with the PPM drafts. Let's just do the draft documents, redact the specific name of the deal because we don't have the deal yet. So then when we have it and we get it, work on finding a way to compliantly talk to lenders for the debt portion of it, compliantly talk to private equity firms to see what their criteria is, and then to find people who, number one, are accredited investors, number two, who are would be interested in potentially investing if there was a deal. And so it's all kind of future looking, and you're not saying the terms of any deal just to be compliant or any, and all that.
Now, do you guys like help do the marketing materials and stuff like that? You coach them through here's how you speak to the investors, here's what you need to say, here's what you can't say. Do you provide any of that guidance?
Yeah, exactly. So a lot of that. So then we do done for you pitch decks, done for you PPM drafts, done for you financial models and projection. All yeah, so all that's done for you, and then coaching more on the online how to do that initial outreach. One example is that we actually have like an army of I think a few hundred LinkedIn accounts that people actually rent and share, which is kind of another crazy trick. But just how to talk to people to get them to open up rather than being an email blast or something. So
Okay.
yeah, all through that process.
So if you tell them you want to hold on their money for 15 years while you hold the company, it's less interesting than I need it for 3 years to grow this and sell it in the backside. So you find that to be true inside of this, or it all depends on the investor?
Yeah, the quick answer is yes in general because we look at the audience. This is the most important is what's their criteria, and then we look at what's the benefits of them working to you versus putting the money in the S&P, and then the other one is what's the cost, risk, or downside. In other words, of them putting their money with you in terms of management fees, performance fees, or hold period. What's like are the drawbacks worth the benefit? And then the other things we can go into other things, but then it's a function of all those, and then it's to hypothesize on it, and then test it out by just talking to the people in that specific point in time, and then seeing what the results are. Just a scientific method, because yeah, the quick answer is yeah. The shorter, the less risk and everything. But the only way to know is to test it out. Just like how we were saying offline, like the market has changed for some folks, so people are acting differently and are more conservative, right? So
Do you teach these guys to go out and meet people and know what they're willing to invest, have those relationships, get them committed, and then like, okay, I'm working on this. I'll be able to present something to you at a certain time, or should the pitch be ready when they talk to
what you just said in the last 2 minutes, if anybody listens to this podcast,
them?
the only thing that should take away from this podcast is what you said in the last 2 minutes. That's literally exactly what we're trying to communicate to people. So exactly what you did. The thing is that yeah, flying and meeting them and all this. The idea is we just want to make sure for that first initial touch points, we it's just to fill them out. The thing is the reason why what you're doing is really clever is you're using other people's traffic to pre-vet some of these leads, right? So that's why it's brilliant, and that's basically what we teach. The only thing is that there's that, and then the second one is kind of the follow-up, where it's where they go over the entire. We just say go over the subscription agreement, and then we like to say that because sometimes for these bigger investors, there's a bit of a more, there are just a few more calls, and really it's just a Q&A and objection handling. That's how we pitch it, and then just being honest and just saying what the thing actually is. The preamble before this, before all of this too, is kind of like people. The problem of securities law, and we can listen to the lawyers what they say too, is that it's principles based rather than rules based. So sometimes in the practical world, sometimes it's even less about the definition, which is obviously super important. Sometimes it's more about bumping into somebody litigious who doesn't like you or an investor that's angry with you, and then they whistle blow to the SEC because a lot of the SEC's efforts, instead of it being proactive, unless there's huge money involved, it's usually not proactive; it's more reactive. So then it's really just defense against that. But I agree completely. But the only thing is that you can have like another security that's debt only that can convert the convertible debenture or something different, or you just talk to an investor that just has a bad day and then they just want to get you in trouble.